Welcome back. Let's drill it down then to the individual stocks you should keep on your radar. Our entire research team is standing by. This is CNBC-TV18's list of top stocks for the day. But Sonia, the numbers which stand out today are InterGlobe Aviation. I guess intuitively we were expecting good numbers given how many people are traveling right now. But how did the numbers shape versus expectations?
So, guys, I just realized that InterGlobe, United Spirits, ITC, all the numbers are really good. So people are traveling. They're drinking, they're eating, they're smoking. So they're doing all the they're covering all forms of pleasure.
As long as they're not doing that on board, right? In the air.
Yeah, that shouldn't happen. But yeah, Indigo's numbers have been very, very good. And I'm going with green on the stock today. The total income was up almost 80%. The EBITDA was very strong. The margins have come in at 20%. And it's a profit. It's a profit of over 900 crores that the company has reported. I guess, the expectation was that they would come through with a 1,000 crore profit this time around. Now, if you look at the EBITDA margin trend, right? I mean, this is the trend on the last 4 Q4 performances. And it's been a really big jump that they've seen, both because of higher demand, lower fuel costs, better yields, better utilization, and all of that has helped in the operational improvement. Now, the revenue per seat kilometer, which is RASK that we track, that as well has improved to 4.68 rupees versus 3.97 year on year. And the management was very bullish on the conference call. They said they expect a higher growth in FY24 compared to 23. They are continuously expanding their international network, and they are looking to add 40-50 aircrafts in FY24 itself. Also, with the issues that, Go Air, etc. have faced, Indigo is just looking to grab more market share, which I think will result in a better performance for them.
Absolutely. Well, we'll keep look out for all these stocks. Now, another thing which has happened is asset management companies have received or will be closely paying attention to what SEBI, the regulator, is really proposing in terms of the expenses that they charge to investors. So this is called the TER, Total Expense Ratio. And the 40-page consultation paper was released yesterday evening, late evening. Now, let me just briefly tell you what this is about. So currently, things like transaction charges, like brokerage charges, when mutual funds buy and sell securities, they pay the brokers through which they execute these trades. GST, taxes, all of these fall outside the ambit of the base TER. So mutual funds will charge, whatever, 1.5%, 2% is the total expense, the TER. And then on top of that, they will add on what they incur as expenses on brokerage, transaction charges, taxes, etc. SEBI has now proposed that all these expenses should be brought within what is called the TER, the total expense ratio. So there is a very clear message to investors. There is transparency that this is the cap, and all costs that mutual funds incur should be within that. It's proposed new slabs, that is expense slabs for equity AUM and non-equity AUM. The relief for the mutual fund industry, right? This is their profit. This is the money that they make, mutual funds make, the TER. And the fear was that the total expense ratio will not be lifted, and mutual funds will be asked to subsume these extra costs within the existing TER, which is not the case. So SEBI has proposed lifting these base TER levels to slightly higher levels to accommodate for some of these extra costs, extra charges, which is the relief at the margin. One more thing, TER slab will be at the level of the AMC and not the scheme level. I spoke with a bunch of mutual fund CEOs. Of course, I mean, this is incrementally negative, but compared to what was being feared, what will come, I think this is at the margin a bit of a relief. Mutual fund stocks, Sonia, have done very badly. I was looking at the largest HDFC AMC. From the highs, the stock is down almost about 55, 56 odd %. And had this been made to be subsumed with the existing TERs, it would have been a body blow, which is not the case. So incrementally at the margin with the stock performance, I think this may not be that bad.
And, I was speaking to a couple of people as well, and they said that there is this huge distributor practice of pushing NFOs. And, switching from existing schemes, etc. All of that will be curbed now. So in general, it's not only helps cut costs for investors, it also helps a lot of these malpractices to be
That's the aim. That's the aim of the regulator. And it's actually 40 pages. I mean, I wrapped it up in 1.5 minutes. And, we'll continue to pay attention to this.
How much time did you spend reading it? Be honest.
Did you make it till the end?
Very little.
Did you make it till the end?
I read the whole thing, yes.
Well
but,
done, well done.
You should have just asked ChatGPT to summarize it for you. Yeah, that's how it's done these days, right?
Next time, Sonia.
Okay, let's move on. But thanks, Prashant, for that. Mangalam is joining in to tell us about a couple of numbers. Mangalam has Bata and Concor on his list. Over to you.
Well, for Bata, it's a good set of numbers coming in, better than the street was, what the street was anticipating. 15% revenue growth is what we were factoring in. The company reported 17% growth. The margins came in at 23.4% versus our poll of 21.5%. So it's a beat out there as well. And as a result of which, that's flown through to the bottom line, 65 crores on the bottom line versus a poll of 54 crores as well. 17% revenue growth would mean 780 crores this quarter. That's been led by, of course, the sneaker sales for the company doing extremely well, 1.6 times what they did the same time last year. And at the same time, gross margins have improved. The company's plowed some of that back into marketing and advertising, as a result of which we've seen the other expenses jump as well. And the EBITDA margins the EBITDA has actually risen by about 12% They've said that they've increased their distribution channel, they've increased their stores, and the next year also they will increase their marketing investment. So all this would bode well for demand. Container Corp, well, ho-hum set of numbers, 6% revenue growth, 8% growth in the EBITDA, 8.5% growth in the net profit. Nothing really to write home about, but at the same time, nothing really to sell the stock on either. The land license fee, which is a big trigger for them, also largely in line with expectations. The quarterly run rate of 90 to 100 crores continues out there. And the big trigger of privatization keeps a floor on Container Corp. So see some green on both these counters.
All right. Thanks very much, Mangalam, for that. Keep an eye out on these names. United Spirits is the next one we're going to focus on. Surbhi is here with details on the earnings from the company. Surbhi, hi, morning.
Morning, Prashant. So it was a mixed set of numbers from United Spirits. Now, the revenue growth was a big positive, but margin compression becomes a concern. They reported a revenue growth of close to 16%, which was better than expected, and this was largely led by the prestige and the above segment. Now, just remember, the numbers for United Spirits are rebased, and it includes the slum sale and the franchising of the popular portfolio. Now, the gross margin continues to see compression, largely led by the commodity inflation. EBITDA is also down 6%, and the margins have contracted significantly, and one reason for that is because of higher A&P spends. A&P sales as a percentage of sales is very high, and that may be negative in the short term, but for the long term, the reinvestment in the business is a positive. What the street may like is the volume numbers. The volume growth was 3% on a year-on-year basis, and the P&A segment, the volume growth was 10%, and the realizations were also up 12% on a year-on-year basis. Now, the stock may not see any positive big reaction because of the revenue growth, but the margin headwinds, remains a concern for United Spirits.
Okay, thank you very much for that. Morgan Stanley also adds that the liquor license plea for Pernod Ricard has been rejected. The company, Pernod Ricard, has moved the Delhi High Court, and that on the sidelines could be positive for United Spirits, though the benefits to flow through will take some time. Keep your eye on Tata Elxsi. It's reported their numbers. Revenue growth has come in at 2.5%, constant currency revenue growth at 1.6%. Now, this is slightly lower than the growth rates the company has been clocking in for the last couple of quarters. EBITDA margins have seen a fall both quarter on quarter and on a year-on-year basis at 29.8%. It's down 40 basis points on a quarter-on-quarter basis. Profits, though, are up 25%. For the full year, the company has clocked in a growth of about 25%. So while these still look like very strong growth numbers, the point is that growth rates for the company have slowed down, and it's also come in slightly lower than what the analyst community was expecting.
Okay, thanks a lot for that. So growth rates slowing down for Tata Elxsi. But let's do one thing. Let's go across to Sonal. She's tracking PI Industries this morning. Sonal, how did the numbers look?
Well, numbers were good on a YOY basis, Sonia, but they were lower than what the street was working with. Again, with PI Industries also, the growth rates have been slowing down now because last year was exceptionally strong for the company. Now, revenues are up 12% at 1565 crore rupees, but lower than the poll of 1610 crore rupees. EBITDA is up 13% at 344 crore rupees. Margins have come to 22% versus a poll of 24.7%. They are flat on a YOY basis. Profits are up 37%, but they're lower than the poll of 311 crore rupees. The company has seen gross margins expansion by 70 basis points to 45%. They have seen a 15% growth in their export market, which is the biggest chunk, versus an expectation of 10% growth. So that bodes well, but it is lower than the historical growth rates of around 25 to 30%. This was led by 17% pricing growth, but decline of 2% in their volumes. Domestic growth came in just at 1% versus an expectation of 5 to 7% growth, driven by volume increase of 2%, but prices declined declined 1%. Gross margins improved, the company says, because of favorable product mix. So yes, the numbers are good, but lower than street expectations. That's why going with red on PI Industries today.
Okay, thank you very much for that. Let's now go across to Ekta. She's going to tell us about Gland Pharma and Krishna Medical Institute. Ekta?
Thanks for that. Well, Gland is extremely disappointing in terms of a performance this time. The revenue was down 28%. The street was anticipating a decline of 14%. Margins have come in at the lowest since November 2020 when it listed. 21%. The street was anticipating 30%. Profit 74 crores and versus estimates of over 200 odd crores. Now Q4 was impacted because of a production line shutdown, reduced business from the B2C division in the domestic market, softer offtake in the rest of the world market due to tender seasonality, and all of the geographies contracted in Q4. Core markets, which is 70% of business, was down 23%. India was down 68%. Rest of the world was down 10%. Remember, this is the fourth consecutive quarter for decline in revenue and profit for Gland. Bernstein, which has an outperform and a target price of 1702, said Q4 was widely off the mark and the management outlook remains weak. For Krishna Institute, I expect the stock to be in the green, revenue up 55% year-on-year, margins at 28%, but the profit has improved to 93 crores versus 80.7 crores year-on-year. Margins have improved Q-on-Q, 28.3 versus 27% sequentially.
Okay, thanks a lot for that. I'm also tracking Uno Minda from the auto ancillary space, and as we've been telling you in the last many days, the entire auto ancillary pack has reported very good numbers, and Uno Minda is no different. It's a revenue growth of 20% that the company has clocked in. The EBITDA is up 16%. The margins have been stable around 11.1%, but the profits have gone up 27%. Their key business, which is the switches segment, they provide switches to OEMs, that saw a very strong 29% growth. The lightings business has been stable at 23% for the last 3 quarters for Uno Minda, and they won incremental orders of more than 300 crores in the four-wheeler lighting business from both Indian as well as Japanese OEMs. But what I also liked in the numbers is that the return ratios for the company have improved substantially. So, in FY22, they had just 15.8% ROCE. That has improved to 19.2%. And the net debt to equity remains quite comfortable as well. It's quite low at about 0.24 times. So, I'm going with green for Uno Minda. It has been one of the strongest stocks in the auto ancillary space. But here's a quick recap of our top stocks with positive news flow. There's InterGlobe Aviation, Bata, Concor, United Spirits and Kins. While AMC should be neutral today, while stocks with negative news flow, there's Tata, Elxsi, PI Industries and Gland Pharma. But there's lots happening across the globe as well, a bit volatile too. So let's get Manisha Gupta to give us a quick handle on what's happening in the world of commodities. Manisha, hi, morning.
Morning, Sonia. Thank you for that. Well, it is about the dollar strength and the U.S. Fed Chair speech today in the evening. That's the two things that the markets are keeping an eye on. And then apart from that, the G7 meetings in Japan begins today. It goes on until 21st. So these are a few events to keep an eye on. In the meanwhile, we did see the crude oil prices decline overnight. But in the Asian markets, we are trading 0.5 to 1% on the higher side. There is buying after 14% decline in crude in the past 1 month. And for this week, the crude is headed for a weekly gain of anywhere between 2 to 3% between the two varieties. What has seen decline has been the gold prices. We are trading at around March lows right now, and the gold prices have come down all the way to $1,960 per ounce. It's down by nearly 3% in this week. What also has seen a decline is the metal sector, even as a couple of days within this week were on the positive side. But copper, for example, is headed for a 5th weekly decline for this one, and most metals also posting negative week for this one.
Okay, Manisha, thanks very much for that. That's commodities in focus. We'll take a very quick commercial break here. Siddharth Khemka of Motilal Oswal Financial Services will join in for some stock calls, reaction to earnings, what should be in focus. Later, we'll connect with the management of Nazara Tech to talk about, and Nodwin Gaming to talk about the fundraise that they've gone ahead with. Stay tuned, coming up.